Welcome back to our series on VF Corporation's financial health and investment potential. Now, we're exploring net earnings over the last decade, from 2014 to 2024. We'll analyze how much of their revenue they've managed to keep as profit and whether their earnings have grown steadily. Our investment criteria: companies need to consistently retain at least 10% of total revenue to earn a solid grade, while the best performers keep over 20%. Plus, we'll be focusing on diluted earnings per share, EPS, to keep things conservative and assume all convertible securities are exercised. Stick around as we uncover the data, spot the trends, and see if VF Corporation makes the cut. Let's begin with 2014. VF Corporation reported net sales of $12.2 billion and a net income of $1 billion, resulting in a net earnings to revenue rate of about 8.6%. Their diluted earnings per share, EPS, stood at $2.38. Now, here's a quick look at the data for the following years, from 2015 to 2024. Looking back at VF Corporation's performance over the years, we can see a mixed picture. The net earnings to revenue ratio was above 10% in some years, like 2015 and 2022, which would qualify as investment grade according to our criteria. However, in the most recent year, 2024, we saw a negative earnings to revenue ratio, indicating a significant downturn. This drop is concerning and doesn't align with the positive growth we expect for investment-grade companies. As a result, it currently doesn't meet our investment-grade criteria, signaling potential risks for investors. If you found this analysis helpful, don't forget to subscribe to the channel and hit the notification bell so you never miss an update.